Welcome to the Global Fund Voyage. My name is Juliana and I'm from iFAST Fund Management. Here at iFAST Fund Management, we manage a diverse range of funds and you can find out more about our funds here.
I'm Daryl, investment consultant with iFAST, and I help craft investment portfolios for high net worth clients.
This is a show where we explore different investment opportunities across the globe, region by region. And in each episode, we'll take a deep dive into different investment markets, share insights, as well as analyze trends that will help you navigate through your investment journey. For the very first episode, we're going to take a look into a very exciting and dynamic market, China. We have with us here today is Eric. Maybe Eric can do a short introduction about yourself.
Hi Juliana, hi Daryl. Thanks for having me and for the cup of coffee. Hi everyone, my name is Eric. I'm a senior portfolio manager at Nikko AM and I manage the Asian and China portfolios for the firm.
Thanks for the introduction, Eric. So I think it's safe to say that not many people get the opportunity to interview a fund manager like yourself, who's usually busy managing hundreds of millions of dollars. So the first question I have for you is, can you share with us more about your day-to-day as a fund manager, and do you have any secret rituals or habits that you use to stay sharp?
Well, I usually start my day at 7 a.m. in the office with the first cup of coffee, basically going through what happened overnight and then basically getting everything ready for the team meeting, which starts at 8:30 every day. And then after that, it's about meeting companies, meeting industry experts, risk managing the portfolio and making sure I can sleep at night.
Well, I think you just gave a very good idea of what it takes to be a fund manager for those aspiring to be one. So I think now we can just move on to our topic for this episode. So China, right? So China's market has been on an uptrend recently, a rebound from previous lows. So I think we could start with an overview of what's happening in the markets. Could you share more about this new resurgence in the market?
You're right, Daryl. Chinese equities have rallied from a very low base, and this resurgence is driven by a growing sense in the market that the policy direction in China has actually pivoted. What has happened over the last few years is that Chinese economy has shifted structurally away from housing towards advanced manufacturing. And unfortunately, this came at the expense of households, which have essentially been subsidizing manufacturing. So there are structural imbalances within the economy, which the government looks to be correcting right now.
So speaking of stimulus, could you break down some of the key stimulus measures that have been introduced and how they have impacted the market so far?
So for the stimulus that have been introduced, I will broadly categorize them into a few areas. First one is support for housing, support for stock market, support for households, and support for local governments. So what all these measures essentially do is they're designed to boost household confidence, to make sure that households are willing to spend again, either through the wealth effect or improving household income expectations. On the wealth effect side, what the government is trying to do is to boost the stock market and to stabilize the housing market. So if you look at the household balance sheet, equities and housing makes up a big part of that total assets. So if you can sort this out, it actually goes a long way in boosting household confidence to make sure that households are willing to spend again. On the income side, it's a little bit more tricky. So what the government has done is to support the lower income segment within China, but also they are trying to support local governments. So what has happened over the last few years is that a lot of the local governments were under financial stress, which meant that they had trouble paying some public servants. In some instances, we've seen that the delay can be up to 10 months. And the local governments have also been unable to pay, some of them have been unable to pay local suppliers, contractors. So there's been a lot of arrears in that sense. And because of the stress that these local governments have, what they have also been doing is to creatively generate revenues for themselves. So that included basically going about imposing fines and penalties on a lot of private companies. So what all of these has done is that it sapped away the confidence from the private sector. As a result, the households have all been at the receiving end of what's happening in the private sector. So the government is trying to reverse all of this and making sure that households are willing to spend again.
Right, I think you just gave quite a good breakdown of the recent stimulus measures. But I think the Chinese government is not new to pushing out stimulus measures. They've done so a few months ago, a year ago. So why are we more encouraged that this is not just a false dawn?
That's a very good question. I have to convince myself that this is the real deal as well. Two things that convince me. Firstly, is that there has been a significant change in policy messaging and communication style this time around, and the nature of it is a lot more coordinated than in the past. So if I can take us back to September 24th, that was when the central bank, which is PBOC, first called for an unscheduled press conference. In the past, they would just release a statement. This time around, they actually called for a conference that included foreign media. So during this press conference, they started talking about all these policies, which were great. But I think more importantly, if you listen carefully to what they say, the tone, the way they message has changed significantly. It's a lot more candid. It's a lot more transparent. They were acknowledging real issues in the economy, and they're providing guidance which is unprecedented, basically. And there was this sense of urgency that was not there in the past. And all of this was echoed again 2 days later by Xi Jinping himself at the Politburo meeting, again unscheduled. And after all of this was followed by a slew of press conferences from Ministry of Finance, Ministry of Housing. So a lot of important people, a lot of important agencies have all been mobilized. They've all been activated. So there is a sense of coordination, and together with that change of messaging, change of communication style, I think it's quite clear to me that actually this time around the government is quite serious about arresting the deflationary pressure in the economy and supporting growth once again.
Yes, I think even so, with all this momentum, we're also seeing a lot of global interest, especially in the Chinese markets right now. We've seen hedge funds shifting from US tech and other Asian markets into China. What's your take on why we're seeing this shift? And do you think it's justified, or are there certain doubts?
So you're right, Daryl. There is a healthy dose of skepticism within the market, and I think it's fully justified, given that, as you mentioned earlier, there have been a few false dawns in the past couple of years, and a lot of people are fully justified for asking, is this the real thing? And I think it helps to understand it from a timing perspective. Firstly, we have to ask the question, why now? Why is the policy pivoting right now? So firstly, if you look at youth unemployment, we know that this has been high for some time, but this has also been actually spiking quite a fair bit in the last couple of months. Secondly, there are a number of social incidents that have been happening recently that have been raising eyebrows. So the highest profile case was in Hunan, where a government official was actually killed by contractors who were facing bankruptcy because they couldn't be paid by local governments. So these are potential red flags for the government. And thirdly, export, which is a very important part, a very important pillar supporting the economy over the last 2 to 3 years. We are starting to see some signs of weaknesses there in the last couple of months as well. And dare I say, I think there could be some downside risks depending on what happens in the US elections next month as well. So if we understand it from that timing perspective, it helps us to understand why this time could be different.
And I think, it's not the first time we've seen a rally in the Chinese stocks that has not lasted. Daryl, maybe you could share with us, the history of these false starts and what investors should be more cautious about.
So you're right, Juliana. So we've seen these bursts of optimism before, only for them to lose steam quickly. Right? If I give an example of what happened just in May 2024, just a couple of months ago, China actually introduced a 200 billion yuan relending facility for state-owned enterprises to purchase homes and convert them into affordable housing. Of course, fast forward to around end of August, I think the pickup for this relending facility has not been great. So over 90% of the funds have not been used. So this is just an example of how the policies were not so effective in terms of even after they provided liquidity. Of course, like Eric mentioned, it could be different this time because they were a lot more serious in terms of how they organized the meetings in September. The key personnel, finance ministers, the housing minister actually came up to speak. Even Xi Jinping himself also acknowledged. So I think possibly right now it could be a different time for China as compared to a few months ago. And we are still, it's important to keep track of what policies the government is going to push out in the next few months to come as well.
And with that in mind, there are also concerns about valuations. Some say that valuations might be getting ahead of the actual recovery. Eric, do you have any thoughts on this?
So given that for Chinese markets, retail participation is actually fairly meaningful, which is why we've seen a fair bit of volatility in the past. This time around, we've seen a huge rally followed by a healthy dose of correction. But net, we are still up. So even despite the rally, Chinese equities are still trading about 10 to 11 times PE, which is cheap relative to emerging market ex-China, which is closer to mid-teens, and even cheaper versus global equities, US equities at 25 times. So if China is truly able to reflate its economy, then I would say that it's far from its fair valuations. It should be closer to about 15 times.
Thanks for sharing that insight, Eric. Now, maybe before we close, I'd like to find out both of your final thoughts. So maybe Daryl first. For China, in the near future, bullish or bearish?
So I will take a more cautious stance. Right? While there has been renewed optimism within the markets, although it's corrected slightly, but we should remain aware of the risks. So there's still ongoing structural challenges within the property sector. But of course, if you see changes in terms of renewed consumer confidence, property sector picking up, I think that's where we can take a more tactical approach when investing in China. For those with higher risk appetites, they can consider taking a tactical position in China and looking at how the government will push out more measures to revive the economy moving forward.
And Eric, what about yourself?
I would say I'm cautiously optimistic. To be clear, what has been announced so far is not enough to reflate the economy. So we will be watching for follow-ups from the government with regards to whether there are any more meaningful fiscal spending after the pivot. We want to see real fiscal plans as well. So it's not just the numbers, but how they are planning to execute these policies. Because in the past, we've had policies where they weren't effective because of the execution. Stakeholders weren't properly incentivized. So this time around, we want to see proper plans and proper spending from the government. And I think that's the only way that the rally can be a lot more sustainable.
Thanks again, Eric, for sharing with us your thoughts and your experiences. And to our viewers, thank you for tuning in to this episode of the Global Fund Voyage. Stay tuned to our next episode where we'll take you through the different investment opportunities around the globe. Till next time, bye!